Home prices remain elevated for the U.S. housing market, but underneath the headline median price number, there are cracks in the market that are widening. In today's video, we're going to look at the latest data for the housing market and what to keep our eye on in the months ahead. Let's get into it. Welcome to Real Estate Watch, the channel that focuses on forward-looking real estate analysis for the U.S. and regional markets. If you're new to the channel, my name is Eric and I am a professional economist in addition to being a licensed real estate agent, so I can bring you a unique perspective that you'll be hard-pressed to find on other YouTube channels. Let's not waste any time and get right into the latest housing market data and assess where we are. According to Redfin, a national real estate brokerage, the U.S. median home price in February came in at $438,000 on a seasonally adjusted basis, which was the same as in January. No big movement in the median price in February, and with mortgage rates staying above 6.5% for now, buyers are still facing the same affordability challenges. And we can see that in the latest data for the demand side of the market, that's the case. Home sales remain well below where they were before the pandemic, and the sales to list price ratio has ticked down again, approaching the low point we saw in the beginning of 2023. On the supply side of the market, new home listings are gradually trending higher, and with home sales remaining subdued, we're seeing market inventories gradually rising as well. The month supply of homes on the market has essentially returned to where it was before the pandemic. From these housing market statistics, it may seem like not much is happening in the housing market right now. No big shifts in supply and demand, so no big shift in the median home price. But there are some other statistics showing some cracks that are widening in the housing market. According to Redfin, 1 in 7 pending home sales were canceled in January, which was a record high share of cancellations during that time of the year. Some of the reasons for the cancellation include buyers getting cold feet due to economic uncertainty or sticker shock from high prices. Rising supply has also led to some buyers backing out because they found a better opportunity elsewhere. And sellers are increasingly becoming aware that they need to lower the price in order to make a deal. The percent of active listings that had price drops reached 20.4% in February, which was the highest on record since Redfin began collecting data in 2012. In the months ahead, housing supply is going to be a key indicator to watch. With buyers increasingly hesitant to buy a home at the current price and mortgage rate, a rising supply is going to shift the current market in favor of buyers. With sellers increasingly realizing they need to drop the price to make a sale, a shift to a buyer's market from rising supply will put even more pressure on sellers to drop prices. These are the cracks that are widening in the housing market right now, and unless mortgage rates come down soon, which is unlikely to happen unless we get into a recession, rising supply and lower prices are going to be key to getting this housing market back into balance from an affordability perspective. But what do you think? Will the housing market remain in its frozen state in 2025? Or is there something else besides rising supply that will get the market moving again? Let me know what you think in the comments section down below. If you like this kind of housing market analysis and want to see more, make sure you are subscribed to this channel and hit that notification bell down below so you won't miss my next video when it comes out. And don't forget to hit that like button down below to support the channel and help it grow. Thanks for stopping by. I'll see you in the next video.